Nilesh, we've covered beauty and the personal care segment, but what about your previous favorites? Liquor companies and Chakna, like Nikun says. See, we're getting sound effects as well on that already. Do they continue to stay put as part of your portfolio?
Absolutely.
Yeah.
I think clearly liquor, alcoholic beverages continues to be a huge opportunity. I mean, one is, of course, currently the domestic opportunity where the sector pretty much is agnostic to any downturns and obviously continues to do very well. But I think very interestingly in the last 1 year or so, the emergence of Indian-made single malt. That's a huge new category which is emerging, and that's finding its way into global markets. It's getting exported.
Radico.
Yeah, and just to kind of have a perspective that the global market, the premium whiskey market globally is at about $150 billion. India's exports is only $350 million. It's probably just 1.5%. Just imagine if that number becomes whatever 5% or something of the global market.
For the world's largest population.
Yes.
And largely malt and
Absolutely. So I think they are discovering newer and newer frontiers. As they build new products, create new brands and scale new frontiers, I think the growth is very strong out there.
But would names like a Radico or a USL or even a Sula for that matter, would they be buys at these current levels? Because they've not fallen too much. I mean, they're those thematic ideas which you continue holding for, decades altogether.
Yeah, we currently own all three. And I think the investment thesis has not changed. Obviously, each of these companies, they have their own growth trajectories. Wine as a category is not growing at the pace at which, say, a single malt is growing. So those variations are there, but we clearly like the categories, and I think we will continue to own as long as we believe the company is a category defining company. I think that's for us is very, very important, and I think as long as that stays, we stay in.
Okay, 3 minutes and then we'll get the first rates for the new Muhurat or the new Samvat year. I just want to quickly recap that what the positioning of the market in last 1 year has been. While we may say that markets lost their track in last 1 month or last 45 days, it's been an exceptionally strong year of wealth creation, and for Indians in general. Indians have 3 balance sheets or 3 large assets in the balance sheet: gold, equities and then real estate. Wherever you are in India, you've benefited from this entire wave, and it's rare that you see gold and equities and real estate, they are going up in a synchronized manner. So frankly, if you look at the total wealth which has got created in all asset classes, Bitcoin could be the minority. Indians don't own a lot of Bitcoin, but gold. Now imagine there is estimated anywhere between $2 to $2.5 trillion of gold in India. That has gone up by 43%. Copper we don't own a lot, but in general, industrial metals have also been on a rise. And then let's look at the Sensex here. Real estate, you don't have a barometer, but you would say that in general, real estate prices in last 2 years are up 50%, last 1 year on an average are up 50%. So Nilesh, it's been a great year for wealth creation. Now you can add back real estate and gold and stocks. Broadly, $10-12 trillion of wealth effect is there in India. If so much of wealth effect is there in India, consumption cannot be down permanently, right?
Yeah, absolutely. No, but consumption is not down. I think we're just looking at maybe 1 or 2 large listed companies and seeing that consumption is down, which is correct. But there's so much which is happening down below that we are seeing individual companies. The challenge in consumption today is disruption, that the incumbents are coming in, are getting challenged by new players. And I think you're clearly seeing currently a tussle between the incumbents and the challengers. That's the problem. It's not that, I mean, companies like, say, for example, the HUL or the DMart, their growth is kind of a bit tepid. But that's because you have the entry of the e-commerce players and then you have the entry of the quick commerce players. Now, if you look at their growth and if you add that up, I still think consumer is growing relatively well. So I think in consumption also what's happening is consumption patterns are changing. There are categories which are mature, and then there are categories which are emerging. Why? Because you have an aspirational India out there. And that's really where a lot of growth is happening. And I think as investors, we need to spot those opportunities and spot those categories.
But even within that, there's a clear distinction, like we used to say when we were coming out of COVID, that it's the K-shaped recovery. Is the premium end across consumption, across asset classes, which continues to play out well? It's really not the segment of the economy which is hit by inflation or, income levels not going up as much as the top rung.
Oh, absolutely. I mean, that's clearly a challenge and that's clearly a risk to our broad India growth. I mean, the fact that job creation needs to happen at a much faster pace, private capex needs to pick up, and a lot of other reforms are required, which makes India even a better place to do business. I think it's only when all of these things happen will you essentially see very broad-based job creation, will you see essentially wages going up, and you will see upskilling happen. I think the biggest thing which needs to happen is upskilling. If you don't have upskilling, per capita incomes are not going to grow.
I mean, trend in a sense has been the blowout stock. The P multiple has just expanded like to a different orbit, so to speak. Nobody saw this coming. This rural stock, rural demand recovery coming back. That's where the surprise in Bajaj has come. M&M, complete domination in the SUV market. They've had like a blitzkrieg of new model launches. So everybody in a sense was happy with that. Titan, valid reasons. Diamonds are no longer girls' best friends. No. That's what they say.
Always been gold. Always been gold.
That's what markets are telling you. That okay, they were in diamond, but who's buying diamond these days? We all ladies, you know it more than me. Yeah. It's all about gold this year.
And silver, by the way, which prices have really shot up there.
So gold, silver,
a
Chakna stock, a Daru company, a beauty company, or simple Nifty. What is Nilesh Shah's Muhurat idea?
No, I still think it. I mean, Nifty is obviously there for people who are probably not very active, or essentially it's meant for investors who essentially don't want to be into stock picking or don't want to do research on their own, or you essentially want to just take a market call. I think Nifty is a great place to be. It's a great compounder. Over long periods also, despite the corrections, it has delivered returns which are at least twice the returns on the bank FD. I mean, you have 5, 6, 7% on bank FD versus that 11, 12% over long periods of time. Leave aside what happened in the last 1 year. So Nifty is a great place to be, but I think beyond Nifty, I mean, look at all these companies which you mentioned, the winners. There have been some winners within the Nifty. So even within Nifty, if those 50 stocks, if you can spot the 5 stocks which can do relatively well, that's a great place. But otherwise, there's essentially a huge universe below the Nifty where you can pick stocks and probably have better returns.
3 stocks which you've been holding from last 3 years, which you will not sell for next 3-4 years. 3 stocks which you have bought in last 3 months, and 3 stocks which you've exited in last 3 months.
That's a complicated set of questions.
Easy.
No, but I think
I'll make it 1-1-1.
Rule of 3-3-3.
I think there are businesses, say the capital market space.
No.
The capital market space. I'm saying is that we own them. We own HDFC AMC. We own Angel One. I'm saying these are the kind of spaces.
You'll keep them for next 3 to 5 years.
I think so. I mean, I don't see any reason why, at least for now, we have any reason to change our view unless stock prices go up incredibly or something like that. That's another matter. And obviously, we, being portfolio managers, we reserve the right to change our view or our decision. But I think the whole capital market space, financialization, the conversion of physical investments into financial investments, I think all of that powered by digitization and the kind of digital public infrastructure that is emerging, I think it's a great place to be. So that's one great place. I think the other is the whole e-com space, the quick commerce space. That's something which still looks to be extremely fascinating. The renewable space, that's something which we have invested in very recently. The solar EPC companies, the wind EPC companies,
there are 3 companies which have gone
and
public
wind equipment.
You're not letting me finish my question. There are 3 companies which have gone public in last 3 months, right?
No, not the ones which have gone public, but the ones which have been around. So we don't participate in IPOs. So obviously we prefer to kind of wait and see for 1 or 2 bad quarters. And that's where we probably take some time to understand these companies.
So which one did you buy then?
So we own Inox Wind, we own Sterling Wilson. So these are the kind of companies that we own. I think renewables, decarbonization, energy
you still
transition.
own Hitachi, which you've been owning for years?
Yeah, that's right. So
you still own IDFC First Bank? I'm checking.
Yes. Yeah, absolutely. I mean, we own that.
Now
so
that
that's
we are
part of,
talking about his portfolio.
So I think these are names which we've been owning, and I think we continue to kind of own them. So, and I don't think at this stage we have our long-term view on any of them has altered.
The one space, Nilesh, that you better than anyone has tracked very carefully has been the traditional IT services plays as well. What happens to those now?
No, I think, I probably think they are no-go areas. These are companies, again, they are the Goliaths, which are still growing, which are probably growing at 3-4%. I mean, if you look at any of these companies over 10 years also, where so much has happened, right? We've talked about internet, digitization, all of that has happened. But these are companies in rupee terms have grown at about 9 to 10% in revenues. Dollar terms, it's still a 5, 6, 7% growth. So unless you buy them when the P multiples are a lot lower, is basically when you can. So I would probably say they're not growth arbitrage, there are multiple valuation arbitrage plays. But I think the most interesting space within the overall IT pack, IT services, is essentially the smaller companies which are already working on AI, which means they are not creating artificial intelligence, but they are the companies which are helping
tools.
enterprises to essentially adopt AI.
But those companies also, Nilesh, have run up a lot.
Some
You know?
yes, some no.
Okay.
And I think,
Would you want to name any?
no, we still don't own any
I mean,
specific.
KPIT Persistent has run up already a
So
lot.
they are not necessarily the AI ones. They are basically, KPIT has been more the one who has essentially worked on ER&D for the automotive segment. So that's obviously as a theme has played out. But I'm talking really of the companies which are helping enterprises to adopt AI and provide big data analytics to them. That's really where the big opportunities. These are companies which are yet very small. They're sub 5,000 crore market cap companies. But I think they probably have enough tailwinds to be able to grow at 20-25% for a very long period of time. And that's something which we need to watch out for. We need to keep spanning, evaluate, and take a call.
You know, I'll just start recapping, and Nilesh, maybe you can get some closing comments from you. What we are going to do now is that we look at the whole, some of the big market men who joined us on the budget day, before the budget day. What is the common theme here? And the common theme here seems to be financials.
Yes.
Sorry.
Yeah, Mike.
Muscle memory. So used to sing budget, sometimes you forget that. That's what age does to you, right? That's what age does to you. They say wisdom aati main to bhul raha hu. So, okay. So the common theme which we've got this time is, one is financials, bet on them. They are ready to make a comeback. Yes. Second is within pharma, look at CDMO, or specifically what you understand within pharma. Third is luxury real estate has a long way to go. Financials is just in a young and a nascent stage in terms of what the financial sector could do, whether it's Angel or whether it is Motilal Oswal or across the board of the capital market. Don't write off consumption yet, and don't expect anything from PSUs more. I think last part is the most important one. Don't expect anything from PSUs more in terms of returns. Is that true?
Yeah, I think, PSUs have had a stellar run. So there's obviously going to be some time of consolidation. The markets have priced in pretty high growth. So we have to see. I think currently, with many of them in that pocket, I think valuations are a little challenging. But again, I think have an open mind. If there is volatility, market gives you that suitable entry opportunity. They could also be great bets because some of them have monopolistic kind of businesses. So don't write them off. And there's so much happening, infrastructure, railways, mobility. I think that segment is truly fascinating from an India point of view. And I think there would be opportunities there as well.
We've been very stock specific, or rather we've discussed a lot of your portfolio stocks. So let's get a quick disclosure going just for so that
so all the names that we have discussed, assume that we have a vested interest in them. So please do your own due diligence before investing in them.
And if they will go up, you will make money.
Sorry?
And if they will go up, you will make money.
Okay, Nilesh, lovely of you to drop by in our studios as always. Thank you so much, and let's hope the next Samvad brings you a lot of dhamaka and sparkle in your portfolio.
Thank you. Thank you so much.
All right, that's Nilesh Shah for you, being very candid and sharing with us his outlook on the markets and where he sees some promising, interesting ideas.
If you like this video, then like, share and subscribe to ET Now.